In this video, we're going to talk about the importance of rules. Rule 217 from the Masterclass: no stock market can escape the US's gravity. The US markets combined have a 60% share of global investment funds. That's why you must look at US markets. We can see the NASDAQ starting to retrace, the SP500 starting to retrace, the Dow starting to retrace, and the Russell has been under pressure. If you look at the other major indices, they're also starting to come down, with the exception of Japan, which is doing quite well at the moment. But gravity is gravity. If the markets sell off, all of the world's markets will sell off. Please bear this in mind. Never be afraid of sell-offs. Rule 252, we are simply prepared and not scared. In this episode, I'm going to go through a couple of rules that will really help you out. Stay tuned, it's going to be fantastic. Hi everyone, I'm Ken from CryptoTradingKS, aiming to boost your financial and emotional success. With 30 plus years in financial markets, I share exclusive content for market success. Subscribe for game-changing insights. Let's run the numbers. A major rule: all markets are intercorrelated and interconnected. If you're in crypto and you're not looking at the DXY and the VIX and the NASDAQ and the S&P and bonds and yields and oil, you're in trouble. If you're not in the US market, if you're in another market and you don't look at the US stock market indices, you're in trouble again. If you're only in the stock market and you don't look at crypto, you're missing valuable signals. And if you're in crypto and you don't look at Bitcoin and you don't look at the stock market indices, you're breaking the rules, and those rules will cost you money. In TM6 inside the Masterclass, I share my live chart here. What we're seeing is the VIX. The VIX is coming up. What does that mean? You need to know the answer to that question. When the VIX comes up, there's more fear inside the markets. When there's fear, what we see is a flight to safety. Also, the major indices and the components of those indices come down. That's exactly what's happening right now. You don't need to look at the news headlines. You can tell the news from the charts. That's another rule. It's critical to understand the interrelationship between bond prices and bond yields, how gold interacts, how the DXY impacts everything. A major rule is Rule 252, prepared and not scared. You must be prepared, but please never be scared. When you get negative momentum inside a market, that's the ultimate time to get on the right side of the percentage. We've been discussing that in the past couple of videos. Let's dive a little bit more deeply and look at the CTKS Method service charts. We're going to specifically look at the NASDAQ. Here, the NASDAQ has been marked up with SL, Stanfield levels and Stanfield zones since 1973. What do we notice here? The NASDAQ is currently at support. There is support between 11,893 and 11,953. The NASDAQ closed at 11,966. Let's have a look at the S&P 500. What did we notice? The S&P 500 came down to two smart money buy levels, and the smart money buy levels have been acting as support. There's currently more negative price momentum underway. The S&P 500 closed at 40.61. The reason that we look at Stanfield zones and Stanfield levels, SCs and SLs, is they're like safety nets. They capture price. Without them, you would think the price is either going to the moon or it's going to zero. In fact, it's going to an SL or SC. Let's have a look at gold. And one thing that you will always find, price is always ping-ponging between SCs or SLs, as the case may be. Gold did a fantastic rally, but it got stopped out at this smart money sell level between 2059 and 2060. What is it currently doing? It's currently trying to consolidate in a smart money buy area from 2046 to 2052. Gold is currently 2048. Without the SCs and SLs, you would look at price and see it going up and saying, oh no, I missed out, I need to get in. And you'd buy on the wrong side of the percentage. We're all about buying on the right side of the percentage. The DXY got caught by smart money buy levels. When it gets above a smart money buy level, it's seeking to head towards the next smart money sell level. This is what price does. When it moves in waves, it's always moving between Stanfield zones. The next smart money resistance zone is from 101,713 to 101,800. There is a smart money support level or a smart money buy area between 101,207 and 101,334. The DXY is currently 101,448. You could imagine if you were looking at price like this, it could be really difficult to know where the structural support and resistance actually is. These buy and sell levels are not recent indicative price, which will RIP your money. They're for all of the DXY's price history. That's since 1971. When we look at the 10-year yields, what do we see happening? It's really hard to know unless you have your SZs on. Now it's starting to make a lot more sense. We can see that the 10-year yield is on its way back up, and we would anticipate this because the DXY is now rising as well. The 10-year has got through a smart money sell area, well, just at the tip of it, between 3.344% and 3.378%. The DXY will influence yields. It's a very important thing to understand. The 10-year closed out at 3.377%. Copper can give us a really good indication into economic health. What was happening with copper's price? We saw copper absolutely exploding. But what happened? We need our Stanfield zones, our SZs. Students of the CTKS method know that we're not fitting recent indicative price. We never ever do that. We're looking for safety nets and ceilings. We're looking for objective dynamic market structure. We're not looking to fit recent indicative price. We never do that. Literally, to understand the CTKS method is to get X-ray vision inside the markets to reveal objective dynamic market structure, or ODMS. We can see that copper finished trading at 386.05. It came up to this smart money sell area from 389.80 to 391.05. Then it was rejected. It came down to a safety net. The safety net did not hold. And that safety net was between 386.40 and 387.20. What you do notice here, the next safety net down between 381.95 and 383.15, the price didn't even go in there. What does that indicate to you? It indicates that the buyers were very, very strong. When price doesn't tap into a particular level, we get a thing called positive air. You can see how much these lines just simplify everything. They strengthen your knowledge. They boost your capability. We can see the copper is trying to get back into this smart money sell area between 386.40 and 387.20. Junk bonds are an incredibly powerful signal that you must be aware of. What's actually happened here? Without our SZs on, it's really hard to tell. But now we can see, with the Stanfield zones on, that junk bonds was rejected from this smart money sell level from 91.95. It didn't even get in there. There was so much sell pressure that it pushed it down. Where did it push it down to? It pushed it down to the next safety net. If you don't know where the safety nets are and how strong the different safety nets are as well, you're in a lot of trouble. That smart money buy area was from 91.01 to 91.15, and we can see that junk bonds closed out at 91.17. Junk bonds give us a really good indication of risk on or risk off activity in the market. One of the most powerful signals that you can get from the market is Bitcoin. When it comes to risk on or risk off behavior, Bitcoin feels it first in both directions. This is why Rule 225 is important to understand. Bitcoin cannot escape the stock market's gravity. To understand gravity is also an important thing to do. One of the best risk-on indicators or risk-off indicators is Bitcoin. When we look at Bitcoin without our SCs, how do we know where price is going? How do we know where smart money is buying or selling? We're seeking to get predictive, and when we saw Bitcoin's price rallying, we kept our eye on this 29,171 to 29,291 level. What happened? Price just couldn't get through it, and it's been rejected from it. The question is, where is the next smart money buy area on Bitcoin? Is Bitcoin just going to collapse, or is it going to get magnetized? The next smart money buy area is from 27,877 to 28,174. And Bitcoin is currently 28,808. To become a sophisticated investor, it's important to upgrade your thinking with proven rules. Rule 45, no alt can escape Bitcoin's gravity, but the alts can give us an indication of the potential future Bitcoin gravity that Bitcoin will exert on the alts. And of course, as Bitcoin cannot escape the stock market's gravity, you can see how everything feeds on everything else. Looking at BNB, what we're seeking to understand, BNB is just basically flatlining. Why is that the case? There's always a reason. The reason is that it's stuck in a very wide smart money buy and smart money sell area. The buyers and the sellers are fighting with each other. That's keeping price at a consolidating level. This is actually what consolidation looks like. We know no alt can escape Bitcoin's gravity, but the way that SEs play out in a specific chart makes all the difference to that chart's price action. Fundamentals are incredibly important, and so too are technicals. Fundamentals, which direction is this going? Technicals, what direction is it actually going right now? One gives you a compass. That's the fundamentals, and the reality is what's actually occurring inside the chart. Getting both is incredibly valuable. You saw with BNB that it was stuck in the middle of a smart money and smart money buy level and smart money sell level. It was just consolidating, waiting to break out in either direction. What do you think is happening with ETH? ETH is just getting pushed around by Bitcoin's gravity, but one thing that we notice, objective dynamic market structure is not holding Ethereum back. If Bitcoin starts to break out, we would expect a big breakout in ETH. The next smart money buy area on Ethereum is from 1777 to 1802. Ethereum is currently 1873. Ethereum's next major smart money sell level is from 2153 to 2183. It's a long way up. Another rule is that you must do your daily three-dimensional risk management. Always remember, you control the trade or investment, but the market controls the return. The market always rewards synchronization. When you make money, you're not taking money out of another person's pockets. That's a very stupid view of the financial markets. That's not realistic at all. The markets simply transfer money from the desynchronized to the synchronized, and everybody gets synchronized and everybody gets desynchronized. Your returns are always based on your knowledge, your courage, and the market always penalizes blame and gambling. That's why we don't do either. It's too expensive. If you want to invest or trade with confidence, it's very important to understand where the smart money is buying and selling. If you want to say goodbye to guesswork and say hello to understanding what's actually going on inside markets, you can register your interest for the CTKS Method service just on ctksmethod.org. Just pop in your name and email and you can lock in your lifetime discount. One of the most important rules that you can get is to know where smart money is buying and selling, and you can do that by looking at Stanfield zones. Stanfield zones are only available through the CTKS method. And the beautiful thing is that you can create your own Stanfield zones by learning the CTKS method. You can literally do it yourself. For the Masterclass students, Level 1 CTKS Method Standards Certification is from LV26 and Level 2 is from LV27, or you can go across to ctksmethod.org. The CTKS method is a new standards-based process that reveals smart money buy and sell levels from any price chart. You can apply it as you've seen to anything. If you want to be part of the 5% who know and leave the 95% who guess behind, just look at the CTKS method. The way that you get prepared and not scared is to understand how all the charts interrelate with each other. It's like a huge jigsaw puzzle, but the pieces do fit together. But the jigsaw puzzle is always changing. That's why you need to be really flexible with your approach. Rule 130, making volatility your best friend, is all about placing your buy orders at SCs on the way down and placing your sell orders at SCs on the way up. As a community, we subscribe to positive excellence. It's important to get your structure and your methodology correct. Don't focus on the money. The money will come as soon as you get the skill, plus the emotional control. That's why we always say we are dedicated and committed. We either win or learn and never blame. And we do that solely and wholly because the markets are very chaotic at all times, and they always have been. If you blame, you get the loss and you lose the lesson as well. If you learn, you have the loss, but you gain an understanding and an insight how to avoid it in the future. All of life is just about getting more and more intelligent, understanding how the world works, and playing inside those rules with a bit of creativity. Hence, we always solve our problems with positive excellence. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.